topic that we have at hand after that entire portfolio discussion is health insurance. Several reasons. Firstly, I would like to talk about Sanjeevani Arogya. The IRDAI, that's essentially the insurance regulator of India, has decided to introduce a standardized health insurance product, and that is called Sanjeevani Arogya. This essentially would have certain features that will be common across health insurance companies, and every health insurance company, be it a private guy or a public guy, will have to offer this product. So let's say, for example, a Bajaj Allianz is offering the product. It will be called the Bajaj Allianz Sanjeevani Arogya policy. So you can go over to your health insurance policy guy and ask him for this Sanjeevani Arogya policy. There's a maximum sum assured of 5 lakh rupees on this one. We will tell you more about this product and whether you should have that one on you. Would that, would that adequately cover you, your family as well? Because there's a family floater option as well in Sanjeevani Arogya. But not just that, there's another topic at hand, and that's not so good news, especially for existing customers of PSBs. That's the PSB merger. That in turn will impact the health insurance premium costs. In fact, the bank mergers are expected to see scores of Mediclaim holders' premium jump almost 50 to up to 300%. Why will that happen, and what could be the options then for such existing policy holders? Where can they move, and what are the choices that they have at this point of time? So like I said, lots to discuss in the health insurance space. So stay tuned. Today we have with us Jayesh Gadekar, the head of health and benefits with innovative solutions at Global Insurance Brokers. Jayesh, thanks so much for joining us on the Money Show. And I think I'd like to start off first with that new product on the block. That's the Sanjeevani Arogya. Let's start off first with what are the key benefits, what are the features of this new product introduced by the IRDAI?
Yeah, so thanks for having me on the show. So the key features of this policy is something which is initiated by IRDA, and I think it's a great initiative, more importantly for the common man or the retail market, as we say. The key features of this policy is basically one, that the policy will have standard terms and conditions across all insurance companies. And I think if you look at the market right now, that is a very big advantage, not only for having easy portability, because that is the basic aim of IRDA, but also ease of understanding the policy and buying it. So some of the key features are, 30 days prior to hospitalization, you can claim if anything leads to the hospitalization, and 60 days post hospitalization is also something that you can claim for this under this policy. There are other advantages of this policy because there are standard exclusions put in, so any kind of a genetic treatment, etc., is not covered. But the advantage is that you get this policy in a pre-prescribed form.
Okay, so I suppose it sort of irons out all those jargons that are associated with health insurance, policy papers, and every health insurance company you go to will have his or her own set of terms and conditions. So I suppose offering this one product will just simplify it all. Okay, so who's the target customer, Jayesh? I mean, ideally, who should opt for the Sanjeevani Arogya policy? If you could talk to us about who will this be the best fit for?
So the target customer is basically, this is aimed for the common man or the retail customer, so as to say. Basically, if you look at the statistics from India, the penetration of health insurance per se is probably the lowest or on the lower side in terms of the, the world market. So therefore, people who are really looking for a health insurance product in this market should definitely buy this. My advice is that you should buy it at a younger age, because then the premium calculation for this is as per your age and the age of your family. So you should definitely go in for this policy at a younger age and keep continuing to pay premium. The other advantage of this policy is also you get a 5% no claim bonus year on year, which is capped to 50% of the total sum insured. So your sum insured keeps increasing year on year.
And I suppose it's always a better idea to, take any health insurance premium at a younger age because, you will any which ways have to pay a lesser premium because you're younger, you may be a bit fitter as well. So your premium costs as well will reduce. Okay, now, Jayesh, what if I already have a health insurance policy? I mean, maybe our viewers may be working with a company, so they will be covered under the company's group insurance policy. Should they still opt for the Sanjeevani Arogya? I mean, will it amp up their health insurance coverage, or is it all right if they don't?
My advice is because this policy comes with a waiting period of about ranges between 48 months basically. It is always advisable to have such a retail policy for everyone, including most of the working people like you. Basically, because the group policy per se is something that the corporate is offering you as long as you are employed with them. So if you are in between jobs or if you are planning even your retirement, per se, this is something that you should start investing right from now because post your retirement, you might not get covered under your corporate group health policy, right?
Okay, fair enough. Now, Jayesh, what will premium cost be like from the Sanjeevani Arogya? How will it differ versus any other health insurance product that, a health insurance company will offer?
So the premium cost for the retail plan is something like I mentioned earlier depends on your age bracket. But generally between the age group of 20 to 30, it is going to be on the lower side. And as you progress in terms of the age brackets, I think the age bracket is for every 5 years period. It will keep going up.
Okay, now let's talk about the other impending topic. That is the impact of the public sector banks merger. Now, as per reports, that could lead to an increase in premium costs. Do you think that is something that we will see? How will it work? And what sort of an increase in premium costs can we expect in our health insurance policies?
Yes, there has been, and that's a good question. There has been quite a lot of discussion around this in the past and in the news currently as well. The fact is that if you understand the model in which the banks today, or the bank assurance channel as we call it in the insurance parlance, is offering the health insurance, it is through a group mediclaim policy which is stitched together by the insurance company for the customers, maybe the account holder or the credit card holder of a particular bank. Now so if you imagine 10 different banks and 10 different policies with multiple insurance companies, they all have different claims experience, as we call it in the insurance parlance. That claim experience is something which derives the premiums. Now, if the merger is going to happen, and it is on the cards, what happens is if a particular policy is functioning, let's say at 80% of the claim ratio, and some other policy is going to function at maybe 150, the merger is not the merger will therefore lead to a merging of all the claims ratio per se, and therefore the group policy per se is not going to be functional anymore, which basically means that the people who are covered under this policy will have to look for a individual policy.
Jayesh,
the group policy is not going to be alive anymore.
Available to those who are in this group policy coverage, which many of us are. What are the options available to such people then?
Yeah, so most of the members of these policies have enjoyed, a cheaper premium because the group policies are generally negotiated very hard. And the retail policy is something which is, pre-prescribed even from a rating point of view. So the rates are filed with the IRDA, and the rates of the retail policies are, filed by by each insurance companies. So those rates are going to be definitely higher compared to the group policy. What has been going around in the news is that the premium is likely to rise from even 50% to about 100% from a retail plan. But if you ask me, frankly, it is not the premium that I'm really worried about. It is also because that is something that you can set off against your income tax, ATD. But the fact is the coverages, right? Now, the waiting period, etc., and that is something that is something which everyone is keenly waiting to look at, is whether the waiting period, which was earlier not there in the group policy, will now suddenly get activated in the retail policy. So the customers who have been with, let's say, X insurance companies and through a X bank, might want to go and check with the company whether the continuation of under the policy will in any way be able to be accommodated in the waiving of the waiting period.
Okay, so that waiting period duration and the fact that it's going to vary from 2 to 5 years for various conditions is something that everyone will be watching out for. On that note, thanks Jayesh for joining us and highlighting the key features of Sanjeevani Arogya, and also what could happen if the PSB under whose group coverage you are in, if it gets merged with another PSB. For one, it's going to lead to an increase in premium costs, so you should be a bit wary on that. And Jayesh has given out some options on what you could do. Could you port out to an individual policy? What are the drawbacks as well on that? Like he mentioned, waiting period would be a key one.